Welcome back everyone. This is a brief update about the gold market. After gold briefly moved to a new multi-year high just a week ago, the precious metal has returned to lower price levels, indirectly implying the bulls could be taking a break for the time being. Even though the media was flooded with negative and uncertain scenarios for the global economy, some factors in favor of those circumstances may have changed in the past days that may be reflected in gold's movement lower. This report aims to explain some of the latest market developments that could be behind gold's pricing activity. Looking at the US dollar, which has lately been in an adverse run compared to the precious metals price, there are some conclusions that traders could use to their advantage. First, even though financial releases from the US that came out in the previous week pointed to a slump for the economy and should have weakened the greenback, the opposite has happened. The initial jobless claims figure, for example, remains an important weekly metric for the US economy. For the previous week, the figure was over 5 million, yet it was lower compared to the week before. A slight improvement, however, could be an indication that people filing for unemployment support are stabilizing and even dropping. This removes some pressure off gold bulls and eases the demand for bullion, as the economic risk is slowly dropping somewhat. There is also positivity toward the greenbacks since last week, when Donald Trump gave the authority to governors around the country to reopen parts of the economy wherever they find appropriate. In our opinion, this is evidence that the US economy is already making steps towards reopening, which means economic activity is resuming. Furthermore, some protests broke out in the US on Monday as people are becoming hesitant over the lockdowns taking place, while health experts noted that lifting the restrictions earlier than initially forecasted, they risked a greater disaster. Globally, there is also a decrease of the spreading of the coronavirus. Countries around the globe are seeing and reporting a steady decrease in the infected rate, which helps the optimism of investors. Many expect the global economy to start uplifting operations in the following month, when many jobs, factories, and working sites could gradually restart. We could even consider a faster recovery rate than expected, keeping in mind that testing for the virus has increased and this tends to minimize the spread immensely. Experts note that more testing is required, however, before being able to confidently say the situation is under control. For this reason, we could say gold's traders could maintain a wait-and-see position until they have confirmed data that economic activity is on a rebound. As a conclusion, today oil prices have dropped to negative levels, which tends to increase investors' worries. For the time being, gold's price has not reacted significantly, yet we should mention during a European lunchtime, gold moved lower. We do not have solid evidence that the two instruments are reacting towards each other, but we leave the possibility for market reaction to be shown in the American session, as gold traders could be enticed to join as headlines increase for the matter. Now moving to the technical analysis and gold's 1-hour chart. Gold has moved in a bearish momentum since the past week. To the downside, we have the S1 1674.40 support level as the first to be tested. Please note the level was tested various times on the 20th of April. Lower we have the S2 1648.25 line and the S3 1623.90, both last seen in the first 10 days of April. In the opposite direction, a move higher can send the precious metals price to our R1 1695.60 price that was tested today, the 21st of April, and both the 20th and 17th. Higher we have the R2 1717 that was last seen on the 17th of April. The highest level we have for our 1-hour time frame chart is the R3 1738.50 level last seen on the 16th of April. The RSI indicator below our chart confirms the bearish mood traders have for the moment. That should about cover it for now. From all of us here at IronFX, best wishes for solid trading.